Welcome to the deep dive. Today we're zeroing in on SJS Enterprises Limited.
That's right. We'll be sifting through their annual reports, other filings, trying to get the real story.
Exactly. Forget the super dense financials for a minute. We want to pull out the key strategic moves, the performance highlights.
And really understand what's driving this company in the decorative aesthetics space. We'll look at their growth, that big acquisition they made.
And what it all points to for their future.
Yeah, so for this, we've got the annual reports for FY 22-23 and the latest one, FY 23-24.
Plus the IPO prospectus and some other bits and pieces, right?
Correct. To build a pretty complete picture, the goal is really to grasp the main developments at SJS.
Understand their market position, strategically speaking.
And, what the signs tell us about where they might be headed.
Okay, sounds good. Let's dive in. Maybe start with that FY 2022-23 performance.
Good place to start. The reports really highlight something interesting there.
Yeah, they actually did better than the overall automotive industry.
Which is notable, especially when you consider there were slowdowns in exports and consumer durables at the time.
Right. So outperforming despite those headwinds.
It really does suggest a certain resilience, doesn't it? And operationally, they look strong.
And financially, the cash position looked pretty comfortable.
Very comfortable. As of March 31st, 2023, they were sitting on $1,648.2 million in cash and equivalents.
Wow, okay. That's a solid cushion.
It provides a really strong foundation.
And it wasn't just cash sitting there, right? They were debt-free.
Correct. Operating debt-free and generating, pretty significant free cash flow.
I saw a figure, 52.2% free cash flow to EBITDA.
That's the one.
Ah.
Speaks volumes about their financial discipline, their efficiency.
And that kind of financial strength. Well, it obviously sets them up for big strategic moves like that acquisition we'll get to.
Exactly. And just to round out that financial picture, their ROCE, return on capital employed, was 33.1%.
Healthy.
And ROE, return on equity, was 15.7%. Also respectable. So they weren't just holding cash, they were using their capital effectively.
Okay, now here's something I found really interesting. Comparing their revenue growth to the wider industry.
Yes, the two-wheeler and passenger vehicle segments specifically.
Yeah. Between FY20 and FY23, industry production volumes were a bit up and down, sometimes even negative.
Right, there was volatility.
But SJS, they showed pretty consistent positive revenue growth. Often, way ahead of the market growth. What's your take?
Well, it's fascinating, isn't it? It shows, I think, a real agility to consistently beat the production growth of the industries they supply. It suggests they're either grabbing market share or maybe focusing on higher growth niches within those industries.
Oh, maybe a bit of both.
Could be. Their diverse product range probably helps them weather downturns in specific segments. It's a key part of their model, I'd say.
Okay, let's shift to strategy then. That big acquisition, Walter Pack, Automotive Products India, or WPI.
A really major move. They took a 90.1% stake.
For $2,393 million. Not small change.
Definitely not. And WPI is, a leader in these high-value functional decorative parts.
Using things like IMD, IML, IMF.
Exactly. In-mold decoration, labeling, forming. It's about integrating the decoration right into the part during manufacturing. Makes them more durable, allows for complex design.
So this wasn't just about getting bigger. It feels like a strategic technology play.
Absolutely. It signals a move towards, higher margin, more technically advanced products, moving up the value chain.
And the reports mentioned expecting multi-fold growth opportunities from this?
Yes, and a wider product portfolio, more chances for cross-selling between the SJS and WPI customer bases.
So they're definitely looking for synergies there.
Makes sense. Integrating WPI's tech and customer access, it should enhance their competitive edge, open doors to, more complex projects, potentially more profitable ones too.
And this ties into their broader ambition, right? To be a preferred partner for the OEMs.
Seems so. They talk about maintaining their strong position in India, obviously, but also strategically growing their global footprint.
Building a wider presence, strengthening the order book, deepening those customer ties.
It all points to a proactive, growth-focused strategy. They're clearly not resting on their laurels.
Okay, so what exactly are they making? The product list is quite long.
It is diverse. You've got your traditional stuff like decals, appliques.
But then also more advanced things, Lux badges, overlays, aluminum badges.
And the MLMD parts we mentioned, lens mask assemblies, optical plastics, chrome-plated parts, even aftermarket stuff under their Transform brand.
The key thing seems to be this constant innovation, though.
Yes, They really emphasize continuous product development as a core strength. They're not just churning out the same old things.
And you can see it in the numbers, can't you? That stat about new products,
Right. In FY 21-22, 16% of their revenue came from products developed just in the last 3-4 years.
which was up massively from FY 18-19 when it was less than 3%.
Exactly. That's a rapid increase. Shows their innovation engine is, well, firing on all cylinders.
And they back it up with resources. I think I saw a figure for their NPD team.
Yeah, an in-house team of over 70 NPD new product development personnel. That's a serious commitment.
And recently, they've been diversifying into some interesting areas. IMLs, IMDs we covered, but also 3D appliques, lens masks, optical plastics.
Aluminum badges, eliminated logos. They're covering a lot of ground.
Looking ahead, what's the focus?
Well, a big one seems to be in-mold electronics, or IMEs.
Integrating electronics directly into molded parts.
Precisely. They see potential there not just in automotive, especially EVs, but also maybe medical devices, other sectors.
And the WPI acquisition helps with that, presumably.
Hugely, yes. It brings complementary tech and expertise in that advanced molding space. Oh, and they're also still focused on growing their chrome plating capacity. Demand seems strong there.
Okay, zooming out a bit. The overall market in India for this stuff looks pretty good.
Yeah, CRISIL estimated a 20% CAGR for the Indian decorative aesthetics industry between FY23 and FY26.
20%, that's significant growth.
Driven mainly by automotive and consumer durables.
Yeah.
And SJS, they expect to actually beat that growth.
Ambitious. How?
They see a continued shift towards more premium products, higher aesthetic content, which, plays right into their strategy of innovation and value add.
And the whole EV boom must be helping too.
Absolutely. It's a major tailwind. You've got favorable government policies, new manufacturing hubs popping up, better infrastructure.
And EVs themselves often demand more sophisticated aesthetics, right?
Exactly. More connected features mean more screens, complex lens assemblies. They often go for premium badges like 3D Lux badges. It all increases demand for what companies like SJS offer.
So growth and strategy looks strong. But what about the other side? Sustainability, ESG.
They seem to be putting effort there too. Their Bengaluru facility, for instance, is LED Gold certified.
That's a pretty high standard.
It is. And they're doing practical things too, like treating effluent water for reuse. Big focus on water conservation.
And energy. I saw something about solar.
Yeah, in Bengaluru, about 90% of their power comes from solar. They generate around 2 megawatts there.
Wow, 90% is huge.
And they're trying to boost renewable use in their other plants too. They also went through the ISO 5001 certification for energy management, completed that around April 2024, I believe.
So a structured approach.
Seems like it, and the results are showing. In FY 23-24, they reported a big drop in emissions, like almost 70% down compared to the previous year.
70%.
A lot of it was Scope 2 emissions, so basically the emissions from the electricity they buy. Switching to renewables makes a huge difference there.
Makes sense. Their renewable energy use hit nearly 90% overall.
Yeah, 89.98%, actually beating their own target. Total solar capacity is 1.9 LW, with agreements to potentially get more.
And water, beyond reuse.
Water-efficient fixtures, wastewater treatment systems,
Yeah.
STP and ETP, reusing that treated water for things like flushing and gardening. Some facilities even have zero liquid discharge systems. Responsible sludge disposal, too. It's quite comprehensive.
Okay, switching gears slightly. What about their people, their employees?
They seem to value employee education. The reports mention its benefits for the company.
Any specific examples?
Well, they invested in VDA 6.3 process auditors training. That's a German automotive standard, quite rigorous. Shows commitment to quality standards demanded by clients.
And safety, obviously crucial in manufacturing.
Definitely. Lots of health and safety training sessions mentioned.
Were there numbers on that? Like how many people got trained?
Yeah, pretty impressive ones, actually.
Yeah.
For both FY 22-23 and FY 21-22, they reported 100% training coverage.
100%. For all employees and workers.
That's what the report states, covering both health and safety and skill development for both men and women.
That's a significant investment.
It suggests a strong focus on human capital. And on fairness, too. They state all permanent employees and workers were paid above minimum wage in both those years.
And safety measures on the shop floor.
A whole list.
Mm-hmm.
Safety calendars with visual indicators, machines with safety sensors, rules for chemical handling, regular inspections, EHS awareness programs, firefighting systems and committees, mandatory PPE, annual medical checkups. It seems quite thorough.
Okay, last couple of areas. Risk and governance. How are they managing that?
Well, there's a board-level risk management committee, standard practice, but important.
And the independent directors, are they active?
It seems so. They hold separate meetings without management present to review performance, risks, governance. The reports also confirm they meet all the independence criteria, code of conduct rules, and are registered with the official data bank.
What about things like whistleblowing?
They have a visual mechanism, yes, a whistleblower policy. And importantly, the report for FY 23-24 stated no employee was denied access to the audit committee.
That's a good sign for transparency.
It is. The audit committee itself has oversight of risk management, supported by the internal auditor, and, again, confirmation that the independent directors have no material financial ties and meet all the SEBI and Companies Act requirements for independence.
Right. So circling back to financials and expansion just briefly, that renewable energy investment.
The 1.9 Milwaukee solar plant generated, what was it, over 1.5 million units of electricity in FY 22-23. Covered about 25% of their needs then. Shows a long-term sustainable view.
And their approach to expanding capacity, like for chrome plating?
Seems quite frugal, actually, focusing on debottlenecking existing lines, using strategic partnerships rather than just massive greenfield investments, efficient capital use.
Which ties back to their strong financial health boosted by the IPO back in November 2021.
Exactly. That IPO provided capital for growth. And they seem to have stable leadership, too, mentioning experienced directors like Mr. K.A. Joseph and getting shareholder approval from Mr. Ramesh C. Jain to continue past 75.
And those financial ratios for March 2022 look solid, too. Good current ratio, low debt equity.
Yeah, debt service coverage was strong, ROE good, decent turnover ratios, all pointing to a robust financial position at that time.
Okay, so let's try and wrap this up. What are the main takeaways?
Well, it looks like SJS Enterprises is financially strong, first off,
Definitely. Debt-free, good cash flow.
strategically active, too. That WPI acquisition is key, pushing them into higher value tech. And they have a real focus on continuous innovation.
Which seems to be paying off, given their growth outpacing the market.
Right, and they're doing this while also making, significant strides in sustainability. LED gold, high renewable energy use.
And focusing on their workforce training, safety, fair wages.
So overall, they seem well-positioned in a growing market, especially with the EV trend providing a boost. And their move towards things like IMEs suggests they're looking firmly towards the future.
Yeah, it paints a pretty promising picture. We've covered a lot, hopefully distilled it down to the core insights for you.
Yeah, tried to pull out the key developments and what they might mean without getting totally lost in the weeds.
Okay, so here's something to chew on as we finish. We've seen SJS balancing traditional products with this push into premium, high-tech aesthetics, and they're serious about sustainability.
Right, those dual strengths.
So how could they leverage those best going forward, especially with consumer tastes always shifting and environmental rules likely getting tighter?
Good question. Balancing cost-effectiveness with premium innovation and green credentials.
And maybe think beyond their current markets. With their expertise in decorative aesthetics and now moving into things like in-mold electronics, what other industries could they potentially branch into? Where else might that skill set apply?
Interesting thought. Beyond auto and consumer durables,
Hmm?
maybe aerospace, high-end appliances. Medical tech definitely seems on their radar, lots to consider.